Hey everyone, sorry to interrupt, but this is the cheesy podcast bit that gets on everyone's nerves, but it's really important to me. Please, if you can like the channel and also subscribe, it helps me a lot to get the best guests in the world for you guys. So click like and subscribe. Appreciate it. Thanks. Hi everyone, I'm Raoul, and welcome to my show, The Journeyman, where we explore that nexus of macro, crypto, and the exponential age of technology. Now, it's getting towards Christmas and the holiday season. We're all kind of getting our travel plans sorted out, thinking about spending time with friends and family. And I thought I'd do a little special for you. What I'm going to do is release the video I did for the Real Vision Festival of Learning that was only on the Real Vision platform about my presentation of the year ahead for crypto, how the banana zone plays out. Hopefully, it'll be a good Christmas present to you and give you some idea how to navigate. Now, it was a few weeks old, but I think it still holds up very well today. You know, it's been an extraordinary year. I've managed to interview some amazing people on the channel. We've explored everything from AI consciousness to crypto and everything in the middle. It's a real privilege to be able to have these conversations and share them with you. And hopefully you're seeing how all of these things fit together. Crypto is just one of the parts of the equation, as is macro, as is technology. We're all going towards this economic singularity, where I think we've got maybe 5 years before the entire system changes. We've got 5 years to make as much money as possible so we can protect ourselves and our families from the massive change that lies ahead. You can already see it. You know, if we're starting to see that AIs have consciousness and crypto's being adopted by the White House, what happens next year? What happens when the robots come? What happens when we're going to Mars? There is so much that is happening, and so much will become complicated. And I'll be there for you on that journey to navigate, to make sense of it all, and to point you in the right direction. But anyway, all I want to do is really wish you a fantastic Christmas or holiday season and an amazing new year. And I'll see you back in 2025 for more of The Journeyman, when I'll take you on that journey into the future. Take care out there. Join me, Raoul, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Welcome, everybody, to the Festival of Learning. Festival of Learning, the Banana Zone edition. Festival of Learning, something that we've been doing since the pandemic, where we all get together and we have an intense day of learning about topics that are important to us. The Banana Zone and crypto are the most important topics of the moment. And we want to help you in your journey of understanding, so you get to understand how better to navigate this. So I'm going to do a presentation first, then Jamie Coote, who's our chief crypto analyst. You see him mainly in the pro crypto tier. He will come on and do a presentation about the nexus of AI and crypto. And then we've got lots of people from meme coins to a great presentation by Sui and a really fun panel with Club Divan. Sui and Club Divan, thank you guys, are sponsors of the Festival of Learning. And you'll see some great presentations from them, both ultra interesting. Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now. Okay, so let's get on to riding the banana with Raoul, which is my session now, which is a ridiculous name, but that's what I've come up with. Now, I just want to level set with you. The first thing I want you to do is stop doing this. This is the 5-minute chart of Bitcoin, and it's all drama. I want you to zoom out and get a proper perspective. Stop the drama of Twitter of, oh my God, it broke 100,000. It's falling below 100,000. It's fallen 10,000 points, and then it's going back up again. All of this is the wrong way to trade crypto, to capture that opportunity to unfuck your future. So I'm going to show you the big picture. So I'll stop sharing this screen and flip you onto a slideshow that I've put together for you all. Now,
what's important about this is when I do these presentations, this is not Real Vision's views. These are my views, Raoul Powell. And my views, the DNA of my views, come from Global Macro Investor, my premium research service that's not part of Real Vision. People in Real Vision get access to that level of thinking in Real Vision Pro. Real Vision Pro is where I outline it for Real Vision members, my macro crypto exponential age of technology Nexus, and that incredible portfolio, which is one of the best performing portfolios I've ever seen, luckily. Also, many of these charts also do appear in Real Vision Plus as part of the macro investing tool that Julian Bittel, who works with me at GMI, he's the chief macro strategist there. His ideas and my ideas come into that MIT product as well, but it's less in depth, doesn't give you the nuance of really what's behind it, which is what the Pro Tiers are all about, just so you understand. So anyway, let's cut to the presentation. So I can run you through the banana zone, where we are, where we're going. Okay. So in September, we started producing this chart. You already know that I have identified that global liquidity is the driver of crypto assets. And for vast periods of time, they actually just mirror global liquidity. When you get into the speculative blow-off season, it actually tends to decouple to the upside because these are exponential assets. But right now, we're still in the point where they're highly coupled. So in September, we showed this chart and said, the first leg of the banana zone is coming. Cuts it today. I mean, that's fucking perfect. I mean, I didn't expect that to work as well as that. I mean, that is literally perfect. And that chart suggests that we go somewhere close to 110,000. Maybe we overshoot it, whatever it is, but into the end of the year before we correct. So this is the first phase of the banana zone. So how is it looking in markets themselves? Let's flip through some charts. Now, these were put together yesterday. We've moved around a bit, but SUI, which you know, A, the sponsor of this. B, as you know, I'm on the foundation of SUI, but as I've always said, I'm a mercenary with my capital. This has been one of our core recommendations in both Global Macro Investor and Pro Crypto, and it's been doing extraordinarily well. The short-term chart of this, breakout. Solana. Here's a daily chart of Solana. Solana had a big wedge pattern, big consolidation, broke out. We're re-wedging right now. We should break out again into year end to follow that liquidity pattern, banana zone. Ethereum, this is the weekly chart of Ethereum. The weekly chart of Ethereum hasn't yet broken out, but it's very close. So whether we break out this month, which is my hunch, and then maybe retest in the January pullback from liquidity, or we pull back here for a bit and then explode through afterwards. Either way, that chart, that wedge pattern, to me is one of the most powerful patterns in all of crypto and suggests we've got a very big move in Ethereum to come. The other thing that I look at is I look at the cross rates between various crypto to try and pick the strongest one. I've already shown that Solana is very strong and it's expected to keep going higher. But when I compare SUI against Solana, it's starting to break out from this inverse head and shoulders pattern, which suggests to me that I would switch more assets from Solana into SUI. That's not saying Solana is going to go down. In fact, I think Solana does extremely well, and you should be overweighted there because it is a second cycle, more proven protocol, while SUI is newer and riskier, but it looks like the alpha is going to come from the new token, the new performer of SUI. And we can hear Adani talking about this later today when Chris Bullock interviews him about SUI. To show another interesting chart that I quite like is XRP has been super strong, but really what we've seen is the upward trend of SUI outperformance. We hit the bottom of the trend channel and we're likely to outperform XRP going forwards again in that ongoing relative outperformance. Again, that's not saying XRP goes down, but I'm just giving you the perspective of these cross rates so you understand the nuance of markets, because really a lot of people have too much assets spread across too many things. When you start comparing one asset to the other, you can actually narrow it down and concentrate your bets into bets that really matter. A lot of the time you think, oh, I want a bit of this and a bit of that and a bit of this because that's going up and that's going up and that's breaking out. You actually underperform by doing that. I found that being more concentrated in my bets, using the don't fuck this up thesis, which is have, let's say, 80 or 90% in the main tokens. And those would be Solana, Bitcoin, Ethereum. Then you can have weightings in whatever you choose it to be, where you think you're going to find outperformance, including some memes, which should be a much smaller part of your portfolio because you're likely to get wrecked. You'll have fun doing so, but you're likely to get wrecked. Okay, next chart, XRP itself, fabulous pattern. Look at wedge after wedge after wedge after wedge. So we're just building another wedge now, ready for the next break higher. So that move is clearly not done. If you look at the weekly chart of XRP, it's a stunner. This massive 7-year wedge is broken. Who knows where this chart goes to? It's very powerful. But then go back to that chart of SUI versus XRP, and it's suggesting that SUI should even outperform this. So that's the perspective I have. Now, it's not always going to be 100% right, but that's how I look at it. Here's SUI Solana. So we've been consolidating the wedge. We had the huge outperformance, consolidation, breakout, retest the breakout zone. Next leg should be SUI's favor because of the long-term chart. And this is the weekly chart. And you saw the daily chart earlier with the inverse head and shoulders, stuff like that. So there's a lot of great charts that are lining up that say banana zone. In meme land, whiff, dog whiff hat, inverse head and shoulders, broke out, retest, next leg higher should come shortly. Jupiter. So Jupiter is it's kind of a leverage bet on Sol because it's a DEX on Sol. So more Sol activity, more Jupiter goes up. So it's broken out as well and looks very positive. These kind of wedge patterns that we see are immensely powerful. So this is beta to Sol. Another one that did a very similar pattern was MOG. It had exactly the same wedge and then it exploded higher, and it's been exploding higher since as it ended up getting listed on the major exchanges. So again, you can see these patterns. They're human behavior on a chart, and they don't all happen at the same time. This is the hard thing about the banana zone, is different things pop at different times, and you've always, trust me, always got the feeling you've got the wrong token. Then yours pumps, and then something else pumps. And you're like, do I chase this one? Have I got it wrong? Stick with your program. You'll probably get it right over time if you've used the don't fuck this up thesis of asset allocation. So don't worry. FOMO is a natural part of this market. The real temptation is to chase every breakout. Don't do that because they roll over time. They repeat the same patterns, but they're not all 100% in the same phase. The other one that's an absolute stunner of a chart is Doge. Doge just keeps doing the same thing every cycle. It does consolidation, 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 explosion. Consolidation, 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 explosion. The explosion is always the banana zone, and Doge is the strongest characteristic of the banana zone. It's this massive meme that gets the world's attention. It has been going since 2013, and it has been unstoppable. And look at the breakout levels. Now, if we repeat anything like we did the last two banana zone periods, we've got a hell of a ride to come. So Doge is something that I keep a close focus on. And again, once we zoom down to the shorter term time horizon, Doge, and again, this is slightly out of date, this is from yesterday, but Doge is wedging yet again. These wedges are fabulous patterns in bull markets or bear markets, depending which way you're looking at, but they consolidation, the pause that refreshes, next leg higher. So we're expecting any day now, digestion of a little bit of the move we had with Bitcoin going to 104,000, consolidate, then something will break. I don't know what it was. SUI broke yesterday, broke to the upside. Now it's consolidating. Maybe it's Doge tomorrow. And this rolling breakouts is how it happens. Then consolidation. And as people build confidence, we start moving into, okay, bigger correction to come. Doge Bitcoin is like, I think, the most humorous chart in all of humanity. What it's saying is since Doge came out in 2013, it's outperformed Bitcoin by 500%. It's suggesting that Doge is the hardest currency in the known galaxy. Now, if that chart plays out and it breaks that kind of downward sloping wedge or whatever channel, and we go to a new high, I mean, that's telling us something that we can't get our heads around, that Doge is literally a better currency than Bitcoin. And I know that's contentious. I'm just looking at the charts. I find it hilarious. We may be living in a simulation, and it's probably Elon's simulation. Therefore, this works. One of the memes you all know I've got, Smoking Chicken Fish. Smoking Chicken Fish did a perfect rip up and then long-term consolidation, which happens to be a wick-off reaccumulation pattern. We should expect it to go to the top of the range around the sort of 120, 130 level, chop around there for a bit and then explode higher. So, you can use these kind of patterns as well. But again, they're all suggestive that we're in the banana zone, the first leg of the banana zone. Not everything sinks. They come one after the other, Then we get a big correction. And maybe in that bigger correction, it could be the majors correct and the alts explode higher. I'm not sure yet. We'll have to wait and see. I don't trade it. And we'll talk about that correction in a bit. Smoking Chicken Fish broke out of the downward sloping wedge pattern as well. So again, just more confirmation. Here's a leverage play on SWI, which is deep book, which is the liquidity layer for SWI. So the more, if you think of like the Jupiter idea, the more activity that happens on SWI, the more deep book is likely to go up. And it's like $180 million right now as an entire value. Now, if we're right about SWI, that it gets into the top 10 and potentially the top 5 in this cycle, well, the liquidity layer is going to be extremely valuable. So, there could potentially, and it's not a recommendation, but it could do a 10x. So this is how I'm saying there are ways of having leverage plays on top. Okay, let's go back to the liquidity story. So the liquidity story here is, oh my God, and I've been sent this chart 1,000 times by people. Oh my God, what happens? Is it all over? Is this the peak? Is this the end? Do we get out now? What happens? Panic, bullshit. Okay, we had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher. So much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone. Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle. So we can see these banana zone periods as they start appearing. Bitcoin just does this every time, like Doge does. So we've just broken that part of the cycle. So this is the start of the banana zone as we start accelerating higher. Going back to liquidity, here's Global M2. You see, Global M2 does this a lot. It also wedges. I love a wedge. They're the best chart patterns in the world. And what happens is it has a break higher, then this consolidation. It's happened every time we've got to the banana zone period, the kind of US election cycle, stuff like that. So we've done that. We've corrected the breakout. Now, Global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards. And that will then reignite the next phase of the banana zone as we start bouncing higher. You can see those corrections in M2 were short. Now, the reason being is we've got to roll all of this global liquidity. We've got massive amounts of debt to roll over, and you need liquidity to do it. So that is the game, the big game, the everything code game that I've talked to you about. So the everything code game is very much at play. This is a phase, the early phase of the breakout. This year is the year of liquidity, and that's why the year ahead, and that's why the banana zone plays out so beautifully. So we talked about global M2 being driven by the dollar. So let's look at the dollar. And also rates is the other part of financial conditions and liquidity. So what we're finding is that the dollar, as you can see, and rates had moved away from trend. That was the strength that we saw. This is what creates the down move in global liquidity. Now, what's interesting is the Citi Economic Surprises Index, which is an index of whether the economy is beating forecasts or underperforming forecasts, says we should now have a period of underperforming forecasts because it was driven by the tightening of conditions from the dollar and rates. Now, obviously, we know if the economy starts underperforming forecasts, like we just saw the unemployment rate rise to 4.2%. Once we start to see things like that happening, what happens is people start thinking about, we need to cut rates more. So that's a very interesting thing. So here in white is rate cuts priced in. Very few rate cuts priced in. So there's like, I don't know what the scale is here, but there's very little rate cuts priced in, but it's driven on a forward basis by the dollar and the long end. So it's now saying, as we weaken economic growth, we should start to see rate cuts. And then, as you can see, we're starting to see the pickup again in financial conditions, which is important. And I'll come into that in a minute. So when you put it all together, they're all the same thing. Fed rate cuts, the DXY, 10-year bond yields, they're all highly mirroring each other. 10-year bond yields seem to be suggesting faster and faster that the dollar should roll over and rates should roll over too. That creates financial conditions. And now what we've got here is financial conditions index, which is rates, the dollar, and oil prices, has been consolidating for a period of time. And it is suggesting that the ISM, which is the business cycle, the Institute of Supply Managers survey, should be much higher, i.e. we've got economic growth to come. It leads by 9 months. So in 9 months' time, the economy will be a lot stronger than it is today. And this is going to be important for you. So all of the stuff we talked about, rates, the dollar, even oil prices, all drive financial conditions, which drives cryptocurrencies, which drives markets in general, which drives the business cycle. When we look at the forward-looking basis on the business cycle, we can see things like the Philly Fed. Well, their new orders index is exploding higher. Now, whether this is just on the Trump victory or whether it's on orders they see in advance, not sure yet. Philly Fed expectations index exploding higher. Empire Manufacturing, that's for New York, exploding higher, all suggesting the ISM is going to be super strong going forwards. Why this matters is the ISM, the business cycle, is the coincident factor for the Ethereum Bitcoin cross. So that says, as ISM starts rising, ETH starts outperforming Bitcoin. And why is that? Well, it's a function of ISM being confidence in the economy, disposable income, or free cash flows from businesses. People have more money and feel better and have more confidence as the ISM goes up. The business cycle's better. We're all earning a bit more. Our businesses are doing better. We're making a bit more profits. And we recycle those profits into investments. And we go further out the risk curve, which would be Ethereum. We might also like Ethereum because it has a yield while Bitcoin doesn't. So we might park more of our money into that yield as well to make our money grow for us. So anyway, it's a big factor for ETH Bitcoin, the business cycle. Crypto and macro are the same thing. And that's a really important thing to note. Most of the financial establishment hasn't understood this, but at Global Macro Investor, we have entirely led the way on this. We have thousands of charts. We have more in-depth research on that nexus of macro and crypto than literally anybody else on earth. And we're very confident in how this plays out. So when we go back to the price chart, hey presto, it's another wedge. This is the ETH Bitcoin weekly cross. If you remember when I started this presentation, I said, stop using too shorter term charts, because all you'd see on Twitter is ETH's terrible, it's falling, and it's just going to underperform forever. Look at the big picture. ETH basically is the same level versus Bitcoin that it was in 2017. It has held value over time, which is very important. It shows the Lindy effect, that this thing is around and it's here to stay. So what we're doing is bouncing off the bottom channel now, just as the ISM is about to pick up. And we either break that wedge, which is a big deal, because that would be ETH outperforming Bitcoin even further, or we stay in that larger range but get to the top of the range. My base case is we break out and ETH outperforms. Now, I know nobody can believe that right now, but ETH is a very different beast to Bitcoin. ETH is a platform. It's a compute platform. It's a storage platform. It's a huge system. Well, Bitcoin is more of a currency, a store of value, collateral layer. They're just very different things. And it's kind of stupid and idiotic that we compare them. But we're here to make money and not have a philosophical debate about what Bitcoin is versus Ethereum. What I'm here to do is help all of us unfuck our futures. And it feels that overweighting Ethereum, if you've got Ethereum, that's the way to do it versus Bitcoin. Now, the ISM also has another little piece of magic. It actually is the signifier for altcoin season. So altcoins, a percent of Bitcoin total market cap, altcoins start massively outperforming. And again, it's driven by the same thing. Optimism, a bit more money, a bit more savings in your pocket, and you wanting to make your money work for you. You go further out the risk curve. So the key signal for altcoin season is the ISM going higher. And I've showed you why we think it goes higher. All of our work suggests that it will. ISM is also, this chart is the same actually for NFTs. That's why we've started to see NFTs rise. It's all driven by the same thing. NFTs are people's savings get recycled into a long-term asset. And then if we look at the crypto total market cap, excluding the top 10, known as others on TradingView, lo and behold, a series of beautiful wedges. That wedge pattern is the chart pattern of the gods, that and the head and shoulders pattern. And here we go, and a couple of the wick-offs. And here we go. Wedge, massive break. Wedge, massive break. Wedge, I would suggest massive break. So where does this go? We're at $400 billion here. Do we go to $4 trillion? $6 trillion? It's possible. It's possible. We just have to wait and see. But the orders of magnitude in the previous ones were much larger. It'll be less big this side. But I'm guessing we're going to see the mid-tier alts really, really start to move in value. And that's where things like Sui and Sei and Celestia and all of these things all lie within these areas, or whatever your favorite token is. And again, please do not think that you need to be a maximalist in any one thing. We're trying to outperform. Use the charts of your chosen token versus Solana. They look like they're going to outperform Solana. You're onto something good. Please don't use something that's very short term. I want to see a proper basing pattern. That's why I found Sui, because it was outperforming pretty much every token. You might find something else. Again, don't go too far overweight, away from the don't fuck this up thesis. The way to ride the banana is sensibly. It will all play out. Okay, so here's our macro seasons in this impossible to see chart. And if you've got color blindness, you're totally fucked. But I'm sorry for that. But here we go, we're in crypto summer. Crypto summer finishes with the start of the banana zone. So we saw it well in 2020. 2016 was great. 2012 was great. But it is crypto fall where the real action starts. If we look at 13, it was ridiculous. 17 was ridiculous. 21 was a weird one. And it was a weird one actually because of a simple thing, is the pandemic had caused a faster spike in crypto summer, but also the massive liquidity injections started to get withdrawn, and the business cycle peaked very quickly in March of 2021. And so we had liquidity peaking and the business cycle peaking in March 2021, and that stopped the second leg of the rally, the phase 3 of the banana zone, from really extending like it did in 2017. Conditions for me are much more similar to 2017, and that's what I think. So let's compare the previous cycles. Now, it's a little bit difficult to see with all of the various colors, but basically you can see from the orange, the current pattern is looking very similar to either the 2015-18 pattern or the 18-21. We think it's much closer to the 2015-18 pattern, and that we've got an extended move to come, an extended banana. So I've always been asked and talked about my probability weightings. I do not see a peak in the cycle early, because guess what? The business cycle is at its bottom. The White House has just come in with all of the new people. Their job, grow. They will fucking force this economy to grow. And therefore, the business cycle has at least 9 months, probably 12 months to play out. We could even see an extended cycle into 2026, but it will be a cycle. It will not be a super cycle, because liquidity gets withdrawn and then gets eventually re-added again as the economy heats up. But the back end loaded, so we have a run into year end, a correction from liquidity, then a run into March, April. That usually is altcoin season central. Then we tend to have a pause or a pullback post-tax season. Late summer, we kick off again. 2017, we had a Bitcoin 10x'd in 4 months. So all sorts of drama can happen. So the lifestyle chips component that I've talked about a lot, I would use probably the Feb, March, April strength. If you want to take some lifestyle chips off, 20%, 15%, 30%, 50%, whatever it is you want to maintain your lifestyle, then you've got the power to run the second half of the bull market, because you're going to be in fear all the way. Am I going to lose my money? Am I going to get this wrong? Is it going to be 2021 over again? If you've secured that thing, your mortgage on your house or your car payment or that holiday or paid off your debts, whatever that lifestyle goal is, get that fucking sorted out as fast as possible. It will clear your head and allow you to extend the cycle, or if not, run multi-cycles. The real wealth is actually made not by trading the cycle, but by running multi-cycles, because it compounds over time. So if you think of, the depths of macro crypto winter in 2018, we were down at, 2,000 Bitcoin. Where are we now? 100,000, that's a 50x. You didn't have to do anything. You didn't have all the drama, all the ups and downs, and oh my God, FTX and all of this. All of it didn't matter. So just keep that in mind when you get, all of you are over-focused on the cycle. I want to sell at the top and buy at the bottom, and I'm going to crush it. Take your lifestyle chips off. You can then run whatever you want. So we're getting closer to that period. Here is the comparison when you put them all together, the last two halvings and where we are now. So where we are now is very similar to the white one. And the white one is the halving from the 2016-17 cycle. Now look at both of those charts. At exactly like whatever it is, 170 days after the halving, they both have this correction, the liquidity correction. It's all the same thing. This is the everything code. It's all driven by liquidity and the Bitcoin halvings and the patterns that emerge. So that correction, however long that takes, call it a month, 3 weeks, that correction ushers in phase 2 of the banana zone, which tends to be the violent propulsion of alts, the banana zone signature pattern. So are we overbought yet? Should we be worried? Should we be thinking, my God, what happens if it's over 100,000 and it tops here? Well, our core risk indicator is nowhere near overbought. We're still barely mid. So it's suggesting we've got a lot further to go. When we look at the log regression channel, this is my kind of chart of truth. The thing that I find is immensely helpful. Well, we're not even at the mean of the trend. So we're still below mean. Now we're going to go to 1 or 2 standard deviations. In fact, it's never not gone to 2 standard deviations. 2 standard deviations, you're talking $500,000 plus Bitcoin. Now, maybe it doesn't. Maybe the law of diminishing returns kicks in and gets to 1 standard deviation. Well, that gets you to 250,000 or so. I'm not giving you projections. I'm giving you contextualization of what an exponential trend looks like. All to play for, so there's nothing to worry about. Cycle top finder. This has been a really good way of finding the cycle top. We are nowhere there. Absolutely nowhere near. So again, chances are we'll have a little pullback in January. First we'll hit year end, a little pullback in January, and we'll just keep ripping higher until we eventually hit the cycle top. But that's a long way from now and much later towards the very end of 2025 or even into 2026. We can't tell yet. We see how liquidity plays out, but that's where we are in the banana zone. So picture this. If we just followed what happened in 2017, the last time Trump got in, government came in, is we had this correction driven by liquidity. It would take us back down to, let's say, the gap on the chart, something like 80,000. I'm not sure that we get that because of beginning of the year flows from institutions and other players, but a correction is the most likely outcome. It's very unlikely for it to go in a straight line. And you're all going to go, what should I do? This looks terrifying. Oh my God. Again, please, it's fucking noise. Don't fuck this up. It says expect 30% pullbacks. So please do not start thinking, how do I hedge this? Do I top out? Do I sell mine up and buy them lower? What you'll do is you will lose out and you will miss the rally because you've overcomplicated a simple trade. The simple trade is do nothing. So please think about doing nothing. We also don't know if Bitcoin falls, whether alts take that pause and everybody focuses on altcoins and alts rip higher. So we don't know the structure of this. So again, don't do anything unless this is why we don't use leverage, right? So that's my view on this. In the end, this is the game. The game is the banana zone. Look where we are. We've just started the banana zone. We've had the boring zone. We all suffered that. We had a big boring zone this year, much like the 2012 boring zone. We've just started. Now look at the beginning of each one of these. There's this little wiggle, which is the correction that happens in January. Great. It means nothing on the chart. So the banana zone lies ahead. I've given you the playbook. You can, if you play it right, unfuck your future with a banana. Ride the banana zone with me. Follow the don't fuck this up rules. It's all to play for. So anyway, hopefully this is useful to you. I keep trying to simplify. I see the same questions come up and up and up and up and up again. Is the market going to top here? What do I do? Oh my God, when do I take lifestyle chips? How much SUIs do I have? How much Solana? I can't help you with all of these things. I can just give you a general contextualization, and I hope I've done it here. The thing is, breathe a little bit. Go and touch some grass. Stop hyper-focusing on the 5-minute charts. Stop all the noise on Twitter. Just relax. Ride the banana, and you'll unfuck your future. Anyway, kids, that's enough from me. In a little while, Jamie Coots, who is really one of the greatest crypto analysts in the world, we're very lucky to have him at Real Vision. He'll be sharing some of his latest research with you. Again, we want to blow your minds and show the quality of research. Now, Jamie's mainly in the pro-crypto tier. The pro-crypto tier is where the heavy thinking gets done in crypto. We also do it, obviously, in pro-macro from the Global Macro Investor, but pro-crypto is really for crypto heads who are really into it. There's also RV crypto as well. Jamie, myself, others, we're all involved in that too. We're here for you to help you unfuck your future with a banana. See you around.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.